It's so easy to get caught up whenever you're buying a house to find the right agent, find the right house, find the right community, and envision what you're going to do to your new home. It's so easy to get wrapped up in that excitement that most buyers forget to ask themselves questions, really important questions about their home loan, like other than what type of home loan am I going to get and what type of rate am I going to get, should I be doing a 15-year or a 30-year mortgage? So in today's episode, we're going to talk about the pros and cons of a 15-year versus 30-year mortgage to help you make a smart decision and figure out which one is right for you. My name is Andrew Finney, your real estate geek. If you need help finding a top agent where you live, or if you simply want to drop me a line to say hello, my contact info is below. If you're new here, please go ahead and subscribe to this channel now and like this video. Tap the notification icon if you want to get notified of the next video. Okay team, so let's take a closer look at this. There's 8 core considerations that we want to review today to help you make the right decision between a 15-year and a 30-year mortgage and know the difference between the two and how it's going to impact your financial pocketbook going forward into the future. So the first thing to understand which is right for you or not is to understand your long-term savings or monthly cash flow. What is more important to you, the long-term savings potential of a 15-year mortgage or the savings that you can accrue by having a 30-year fixed rate mortgage? Obviously, this is going to be a little bit of a trade-off. Do you want to pay the least amount of money over time and have the lowest payment, or do you want to pay more on your mortgage and pay it off faster? There isn't one right answer for everybody. It's completely up to you and what you're most comfortable with doing. So the first one is just really assessing and thinking about where you're going to be most comfortable at, paying off the mortgage faster at an increased amount, or actually spreading out the payments over time and being able to save money in the bank. It's up to you. There's no right answer. Just think about it, okay? The second thing is, can you qualify for the 15-year mortgage? So a 15-year mortgage has a higher payment than the 30-year mortgage. So before you can even consider the 15-year mortgage, you have to determine if your income supports the higher payments. Now, a good trusted local loan officer will be able to assist you with both options in both scenarios and let you know how much you can qualify for with the 15-year mortgage and also the 30-year mortgage, because that's another core consideration to think. Obviously, the more money that you're putting out for your housing expenses every single month, the lower the amount that you could get approved for your home loan than if you were doing a 30-year mortgage, and you'd be able to have a lower monthly payment, so you'd probably be able to qualify for a little bit more. So reviewing these options and what's most important to you and anyone else that's a decision maker in your household is extremely important to review those options with your local loan officer to come up with a good game plan going forward about what's right for you and what you're going to be most comfortable with moving forward. The third consideration is, what would you do with the extra cash flow? I mean, sometimes people get the extra cash flow like, hey, I want a 3-year fixed rate mortgage because in 2 years I want to buy a boat, and in 3 years I want to buy a truck. You know, whatever the case may be, they go blow the money essentially, right? So if the point is that you want to save money for retirement, or that you want to stack cash away and make an investment, or if you want to just have cash on hand for emergencies, that's a really good way to use that extra income that you would have in between the two. But it's something to think about, because what are you going to do with the extra cash flow? You're going to have extra cash flow because it's going to be a different amount of payment, as opposed to making additional payments onto your mortgage, which is always an option on the 30-year fix if you go that way. But if you have a 15-year fix, then it's going to be a mandatory thing that you got to do to stay compliant and stay up to date on your mortgage payments. So the fourth consideration is your income reliable? Now, a lot of people watching this right now be like, yeah, okay, my income's reliable. I want you to think about something. Everybody leading up into the crash of like 2006, 2008 timeframe, they also thought their income was reliable. We need to be very serious about that and really think about what kind of job we're in and what our skill sets are to ensure that we have a reliable income. If something happened to the economy today, can you produce income enough to support your household and enough to continue making your mortgage payments going into the future? I don't want to scare you. I don't want to be an alarmist. I want to be real with you to help you make a smart decision with your home loan financing and your real estate decisions that you make. Obviously, we all have to have a roof over our head, so it's extremely important, and it's far better to own our house and not waste money on rent, because our home over time will actually pay us back. Now, you can watch some of my other videos where I've mentioned that, and I've shown how that works over time and how it benefits you in the long run. Now, it's really important though, whenever we're thinking about, is income reliable, can you commit to the mortgage amount that you'll be required to pay with a 15-year mortgage, because it might seem like a little bit of a stretch. So it might be feeling like you're taking a little bit of a chance. If your job is secure, maybe you're willing to roll those dice. Can you count on your current income in the future? If so, great. If your income's going to go up, perfect. Now, be very realistic about the career path that you're on and what's going on here, because the higher minimum payment might seem doable now, but it could be terrifying if you or your spouse lost your job or your income declines in the future for some unforeseen reason. Something to think about, something to be real about yourself and ask yourself. Don't be scared by the question. Address the question honestly within yourself and know what's going to be most comfortable to you going forward. The fifth consideration is how much higher is the payment going to be? So a very important thing to know is how much higher will the payment be between a 15-year and a 30-year. So underneath this point, we're going to use an example, and in the example, I'm going to break it down for you based on a 15-year rate and a 30-year mortgage rate. So let's look at an example. Let's say that you're buying a house that's $200,000, and you could qualify for either the 15-year mortgage or the 30-year mortgage. Interest rates change over time, and well, all the time, in fact, right? So depending on when you're watching this video, you just plug and play the interest rate that's going to be applicable at the time, okay? So let's assume that you have a 30-year mortgage and that interest rate is 5%. Your payment on a $200,000 30-year fixed rate mortgage at 5% would be roughly $1,073.64. So 15-year mortgages are actually going to carry less risk for lenders because they're getting their money back faster. Think about it. They're going to get paid off in half the time of a 30-year. So they're going to offer better and more attractive rates to you than if you decide to do a 30-year mortgage. So that difference actually changes over time and is different from each lender. But on average, you could probably expect to save on your interest rate somewhere between 0.75% to 1 full percent lower for the 15-year mortgage than the 30-year mortgage. So now let's use the same amount of mortgage. Let's say that $200,000 mortgage, right? And let's say that the rate for the 15-year is 4.125%. Your payment on a $200,000 15-year mortgage at 4.125% would be roughly $1,491.94. So that's a difference in between the 15-year and the 30-year mortgage of $418.29. So breaking it down by a percentage, that's like 40% higher than the 30-year fixed mortgage. So can you afford the higher mortgage? Only you can answer that question. Take into consideration your living costs, take into consideration any student loans, car notes, any kind of credit card debts, and also do you have an emergency fund? Take these things into consideration whenever you're choosing which mortgage option to go forward with, okay? Because once you decide whether you want a 15-year or 30-year rate mortgage, then you're going to be looking at making that payment consistently for the next 15 or 30 years. The sixth consideration that you want to think about is how much more will you pay over time? What's the holistic picture look like at the end of this 15 years or at the end of this 30 years? And how much is it going to cost you in reality? So in our example, we're talking about a $200,000 mortgage. Well, you'll pay $386,512 in total payments for your 30-year mortgage, and you'll pay roughly $268,548 for your 15-year mortgage using the example that we just went over. Does that seem like a lot to you? Wait, remember this, that a $200,000 is the principal in both scenarios, okay? So let's look at the interest. You will pay $186,512 in interest for your 30-year mortgage, and you'll only pay roughly $68,548 for the 15-year. So taking the risk of a 15-year mortgage can save you nearly 2/3 of the interest that you'll pay over the lifetime of the loan. I know that is a shocker. It is that real. You're probably wondering, how did a $200,000 mortgage go up to almost $400K, right? It's because of interest over time on the loan. So it's something that you really need to be clear about on what you're deciding to do. Now, it's also important to know that a lot of people, at least here in Las Vegas, Nevada, a lot of people will move every 5 to 7 years. So that's why it always goes back to the intent. One of the questions I always ask people when they meet with me at the office in our buyer consultation meetings, or I normally like to call them a discovery meeting because it is. Sometimes I'm discovering what they really want and what's most important to them, and I'm discovering what their needs are and what their wants are and sharing information with them to help them make a smart real estate decision. Well, it's kind of interesting because one of the core questions I always ask them is, how long are you going to live at this home? And they look at me with bewilderment like they've never heard this question before, and they probably haven't. But it's important to know what your intent for the property is, and that'll help you decide whether a 15-year or a 30-year mortgage is going to be best for you and your financial situation moving forward on your new home. The seventh consideration is, what if you can't afford the 15-year mortgage? So if you can't qualify for the 15-year mortgage, or it makes you uncomfortable, like you're losing sleep at night thinking about, oh my God, that is an additional $418 for this payment on the 15-year, the 30-year mortgage, and if you can't commit to that and it makes you nervous, then you have other options. I mean, let's face it, there's nothing to keep you from paying a 30-year mortgage down in 15 years if you wanted to make the additional payments. From this example alone in today's episode, you learn the difference between a $200,000 home loan at 5% for a 30-year fixed, and you've also learned the difference of the $200,000 at the 4.125% interest rate mortgage amount. So you know that's a $418.29. So if you wanted to pay off your mortgage in 15 years, you would just make an additional $418.29 payment onto the principal balance every single month. So what's beautiful about that is that you don't have to do it if you don't want to do it. You can make more than that if you want to do it, and you can make less than that if you want to do it. The purpose is that if you're more comfortable having more money in the bank and saving that money, and you're confident that you won't be blowing it on like superficial things like, oh, I want a magazine, oh, I want a new car, I want this, I want that. Notice that the word keeps trending want, but what do you need and what is wise to have in life? That's the thing that you want to think about with additional $418. $418 over time saved every single month is going to be a big difference, especially if you've invested that money. It can make a huge difference for you when you're thinking about retirement or thinking about other investments that you would like to make. It can really go a long ways to helping you pay off debt. There's a lot of things that you should be considering and thinking about between the two mortgage options and choosing which one is right for you. There's nothing to keep you from making additional payments. Every family that I work with in Las Vegas, Nevada, I always advise them to make at least an additional $100 so long as it's comfortable to their financial situation. I advise them to make at least $100 additional payments onto the principal every single month on the 15th of the month. Now, there's a certain logic to that. We could talk about that differently and how to pay off a mortgage faster in a later video. At the same time, it's one of those things that you want to think about. It's one of those things that you want to plan for. And if you can make more than that, golden. But if you just make as little as $100, $200 additional payments a month, you're shaving 4 years less if it's $100 on average. And it's like 7 years if you're doing 200 or more. So that savings alone is significant. If you start looking at some wonderful calculators out there, like Dave Ramsey has a really cool tool about how to pay off your mortgage quicker. It makes it super easy. It asks you the questions about your home loan. You just insert your information and then you can think about how much more you want to add. If you start playing with it, it's going to start getting your mind going about, even if I choose the 30-year mortgage, I'm going to still be able to pay it off quicker and I'll be able to save $100,000 towards interest if I make X number of money based upon the loan, the amount that you're getting, right? It's something to think about, something to know about, and certainly something to consider moving forward with your home loan options. The 8th consideration is lower interest rate and fast repayment equals lower cost over the lifetime of the loan. That's what we were just talking about with the Dave Ramsey tool, right? So if the bottom line here is that if you want a lower interest rate and the faster you pay off your loan, the less lifetime cost overall for your new home it's going to be. So as opposed to the 30-year example in today's episode when we're talking about that $200,000 home being $368,000 at the end of 30 years versus the 15-year loan where the total amount over the life of the loan was $268,000. That is massively significant and it's something you want to be real about yourself. So go back and watch this video again if you need to and use this information to make a smart decision for your financial future going forward with the purchase of your new home. Now, here's what I'd like you to do. Tell us what you're thinking about this episode in the comment section below, along with any of your advice and tips that you have about how best to choose between a 15-year versus 30-year mortgage and how you made that decision whenever you got your new home. Now I'm going to go ahead and pop up my contact information. If you want to reach out, just drop me a line to say hello. Always love to hear from you. At the same time, if you need help finding a top agent where you live, please let me know. Always here for you and love to help you. If you haven't already done so, I'm going to ask you to do 3 things. Number 1, please subscribe to this channel. Number 2, please like this video. Number 3, please share this video around with someone you know is going to be able to help, because someone just like you, I'm sure you can think of just one, that is asking themselves the same question. Should they be going between a 15-year mortgage or a 30-year mortgage? And they're trying to figure this out. Share this video around with them so that you can help them make a smart decision with their financial future and their home loan options moving forward. Thank you. And between now and next time, I'm wishing you and yours a lifetime full of love, wealth, abundance, and happiness. Thank you for watching today, team, and enjoy an amazing day.